Most people think Saudi Arabia's power comes from oil, production, exports, reserves. That's the surface. Surface power is visible, structural power is not. Saudi Arabia's real power is not the oil itself, it's the control over how that oil enters the global system. Because in a world that runs on energy, control over flow becomes control over everything, a choke point, a lever, a system. That's where the power is. Energy is not optional, it's not a luxury. It's the foundation of modern civilization. Every supply chain, every factory, every airplane, every military operation depends on it, and despite decades of innovation, the world still runs on oil, not partially, structurally. Even today, oil remains one of the most traded and consumed resources on Earth. It powers transportation, it fuels industry, it stabilizes entire economies, and when oil moves, everything else moves with it. But here's what most people don't see. Not all oil producers are equal. Some countries produce oil, some export oil, but very few can influence the system itself. Saudi Arabia can. Saudi Arabia is not just a large producer, it is the only country with consistent large-scale spare capacity, which means it can increase or decrease supply on demand, not theoretically, operationally. That creates a unique position, because in global markets, control over marginal supply means control over price direction. If Saudi Arabia increases production, global prices fall. If it cuts production, prices rise. And this happens fast, not over years, not over months, in real time. Markets react instantly, traders adjust positions, companies revise forecasts, governments reassess risk, and entire economies feel the impact. This is not just supply and demand, this is leverage, because when one actor can influence price direction, that actor influences everything connected to that price, and oil is connected to everything. Fuel costs, transportation, food logistics, manufacturing, electricity generation, inflation itself. When oil rises, inflation rises. When inflation rises, interest rates follow. When interest rates rise, growth slows, markets react, currencies shift, governments adjust policy. One variable, global consequences. But Saudi Arabia's power does not operate in isolation. It operates through a system. That system is OPEC. OPEC is often described as a group of oil-producing countries, a coordination body, a stabilizing force. That's the official narrative. In reality, OPEC is a mechanism of aligned supply control, a structure where multiple producers act in coordination, and when supply is coordinated, market influence multiplies. Inside that system, Saudi Arabia is the central actor. It has the largest reserves, the most flexibility, the strongest operational control, and the most influence over decisions, which means when OPEC moves, Saudi Arabia is usually driving the direction. Not publicly, not aggressively, but structurally. This is where power becomes subtle, because it doesn't look like control, it looks like coordination. But coordination is control at scale. We've seen what happens when this system is used aggressively. In 1973, during the oil embargo, supply was restricted, prices surged, Western economies entered crisis, fuel shortages, economic instability, political pressure. That moment revealed something fundamental. Energy is not just a resource, it's a geopolitical weapon. And since then, the system has evolved, but the principle remains the same. Control supply, control outcomes. Now layer in the financial system, because Saudi Arabia's influence doesn't stop at energy, it extends into money itself. For decades, Saudi Arabia maintained a strategic alignment with the United States. Oil would be traded globally, in US dollars. This created one of the most powerful financial systems in modern history, the petrodollar system, which meant that every country that needed oil needed dollars. Think about the scale of that. If oil is essential, and oil is priced in dollars, then dollars become essential. This creates artificial global demand, not based on preference, based on necessity. Countries accumulate dollar reserves. Central banks hold dollar assets. Global trade routes through the dollar system. This gives the United States enormous financial leverage, a strong currency, global influence, control over liquidity, the ability to finance deficits at scale. But this system has a dependency. It depends on Saudi Arabia maintaining that structure. Because if Saudi Arabia changes the rules, the system begins to shift. And that shift is now becoming visible. China has emerged as one of the largest energy consumers in the world. Its demand is massive, its influence is growing. But China does not want to depend on the dollar. It wants to internationalize its own currency. the yuan. And to do that, it needs one thing: energy transactions outside the dollar system. This is where Saudi Arabia becomes critical again, because if Saudi Arabia begins accepting alternative currencies, even partially, the implications are enormous. Global demand for the dollar weakens, financial power redistributes, currency systems begin to fragment, not overnight, but structurally, and this is how power shifts in the modern world, not through sudden collapse, but through gradual realignment. Saudi Arabia does not need to make a dramatic move, it only needs to adjust the system slightly, and the effects compound over time. This is the difference between visible power and structural power. Visible power is immediate, structural power is cumulative. Now step back and look at the full system. Saudi Arabia controls three critical layers. First, the resource, energy, the foundation of global activity. Second, the flow, supply timing, production control, market influence. Third, the system, currency alignment, global financial integration. Most people only see the first layer: oil, production, exports. But real power sits in layers 2 and 3. Control over flow, control over system. Because that's where leverage becomes unavoidable. This is why Saudi Arabia doesn't need to dominate headlines, it doesn't need to project power aggressively, it doesn't need to compete in the same way other countries do, because it operates at a different level, a structural level. It influences prices without setting them directly. It influences markets without participating in them directly. It influences geopolitics without engaging in open conflict. That is modern power. And this is the pattern you should start recognizing. Power today is not just about who produces, it's about who controls access, who controls timing, who controls systems, because systems create dependence, and dependence creates leverage. So, when you think about global power, don't just look at GDP, don't just look at military strength, look at who controls the variables that everything else depends on. Look at who can influence outcomes without direct intervention. Look at who can move entire markets with a single decision. Because that's where real power exists, not in what is visible, but in what is structural. Saudi Arabia doesn't just produce oil, it sits at a critical choke point in the global system, and choke points are where leverage concentrates. So the next time you hear about power, ask a different question. Not, who is the biggest, but, who controls the system? Because once you understand that, you start to see power differently, and once you see it, you can't unsee it. Now the real question is, if control over energy defines power today, what happens when that control starts to shift? And more importantly, who will control the next system the world depends on?